Good morning and happy Friday, trader friends. We are here on Trade Live with IG with the indelible Chris Beecham. Morning, Chris.
Good morning. Is that even the right word for a Friday morning? I don't know. Indelible.
Well, it's dry. We've got another day of beautiful sunshine, I believe so, coming up.
It's a bit nicer, yeah, than yesterday. A bit nicer than it was yesterday.
Yeah. Although we did have quite a nice, afternoon, evening sort of sunshine, warmth come through. But it's still relatively good for end of August.
Yeah, well, it was dark when I got up and went to work yesterday morning, so it's that kind of thing now for the next 9 months. That's my daylight commute gone.
You're so cheerful, Chris.
I am really. It's that kind of feeling on a Friday where nothing else is going on except the one thing that matters.
Now, is it that same feeling as everyone is counting down to Jackson Hole? Of course, we have that big event coming up, but ahead of that, do we have a quick rundown of what your day is looking like? Producer Phil, have you also got... we're being told that the new studio is almost ready. We've got like a new, won't say too much about the walls because I want it to be a surprise to everyone, but it is going to look very different. Plus today we've got Pete Ward and Bill Blaine as well. What is the rest of your day looking like, Chris?
Apart from waiting to see what Jerome Powell says, we've got to finish off the morning call, and it's a bit of a quieter day actually. I'm still catching up with emails from being away on holiday, so that will also take up my time. It takes time to delete 1,000 emails, really.
On that note, shall we look at Jackson Hole before or after overnight action? Should we do it? Let's go to overnight action, and then we'll be right back for this. Right, good morning. Let's get us across the Jackson Hole preview. Everything you need to know. Of course, that big thing will be JP's keynote speech there at around 10 Eastern, and it's probably going to be a swan song.
It is. It's his last go. Do you know Jackson Hole is in the same state as Custer's last stand in Wyoming? I learned that from Bloomberg yesterday.
Oh, so I didn't know this.
They're calling it Jerome Powell's last stand, as it is, of course, because it is his last go. And that, if it was my last go, I'd be tempted to throw in a hand grenade. But maybe Powell will decide that discretion is the better part of valor. Who knows? But it's been obviously a week where you've had president picking on another Fed governor. You've had Alan Bullard, who was on the Fed and is now an academic and is clearly advertising for the top job, saying that they should cut by 150 basis points by the end of the year. This is literally The Apprentice in real time. They're all auditioning for Powell's job, and he has to go out there, give the keynote, give the opening remarks, and then quietly retire to the sidelines. But I think he might go for the combative approach and the defense of the independent central bank and say, we're here, we're not moving. We're not going to do what the president wants us to do just because he thinks that's what should happen. I think that might be interesting, really, especially with the market, pricing in, what was it yesterday, 79% chance of a September rate cut. So there's a lot to play with here, but you definitely get the sense from markets that we've drifted lower all week. On the Dow, obviously tech has been much more heavily affected. Everyone's just waiting for this now. That's it's been the only game in town all week. PMIs yesterday, no one cares. It's all about what happens at 3 p.m. Today.
Chris, I'd like to see him do a drop mic at the end of after lobbing a hand grenade.
Well, he's got this, hasn't he? This year was it this year with the people that invaded the stage? That closed the something door? That's the kind of thing. He is capable of doing it, and of course he delivered that bravura performance last month, really, with the renovation stuff, and the president, the man can do facial expressions like nobody else. Him and Georgia Maloney should form a troupe because they can both do facial expressions. Did you see that on the weekend?
No, I didn't see it.
Oh, the Italian prime minister, she became famous for the eye rolling and the death stare she gives everyone else in meetings. But the two of them together could do really, really well. But I think it's going to be a very, very tough ask for him.
I know, of course, death stare. But it was Maloney that guided Biden back gently when Biden went off into the distance.
Yeah, well, she has form in this. She's very good at. She's a bit of a Trump whisperer as well. I think really her and the Finnish president have really got his number. I think at the moment. So.
What's also interesting is that Powell. Everyone's watching to see what he says about these cuts. A majority of deep rate cut advocates, of course, very likely to emerge on the Fed's policy making committee. Magically, surprisingly, after he's gone. Also, the dollar steady. Gold firming though. This is after the Cook story, after giving up much of the ground it had in the previous session. Also, we had quite a few bits and bobs yesterday. So much happened. What shall we start with? Shall we start with perhaps Walmart? Did you see the numbers?
Yeah, it was a very not a great set of numbers from Walmart. Very, very sort of disappointing. And of course, the warning there, the key word there was tariffs. Watching its cost increase every week, squeezing its profit margins. And we know supermarkets in the UK and the US, the same thing. They get all this opprobrium heaped on them that obviously raising prices. But this is a business where the margins are wafer thin. And they're thinner than an NVIDIA chip. How's that for you? But they're seeing these tariffs come through. And it's been really, so far it's been gradual, but they know it's continuing, I think. And this is kind of the drumbeat of every earnings report and every sort of market event at the moment, that this thing is getting more and more prevalent, even if it's not immediately showing up in the data.
Walmart also, just showing up my chart here, is the inventory costs, rising inventory costs that pulled in part those shares lower. Interesting that, the numbers from Walmart, I was expecting it to at least give us a spotlight as to which segment of its consumers were hurting, but actually every level, across all income levels, we saw a pullback. So that's quite indicative of the emerging cracks.
It is, but you should look at the share price. Look at the run it's had over the past 2 years. We've gone from nearly $50 a share to almost $100 a share. So in one sense, it's important not to get too worked up about this stuff. It fell short of expectations, but it raised guidance for the year, and it managed to take more market share from rivals. So it's not all bad. It's the question everyone's asking is, when do tariffs really show up? Maybe they're starting to, and yesterday's PMIs did show that. And when they do, and if they do, how big will it be? And can markets cope with this? And I think Walmart is kind of the canary in the coal mine at this point. Will US companies continue to eat these tariffs, or will they have to pass them on? Probably a bit of both, obviously. But I think here is one of the signs that next, and I said this last earnings season, next earnings season will be probably the one where they do begin to show up more substantially.
Yeah. Speaking of which, I'm whacking up Walmart's share price there for you. And as you can see there, as Chris was saying, this is a daily chart. We have seen it move higher, but of course, after those earnings, we saw that move very much lower, down 4.5% there for the session. Another one that tanked yesterday, WH Smith. Loads of I saw your tweet as well, Chris, online, and lots of our trader friends here who watch the show also in the morning took positions. I think some of them thought, oh, the drop's fallen by too much and they were going to jump in. I did say be careful.
Yes, I looked at that yesterday. I was looking at the earnings in growth in Smiths, and that's been better over the last couple of years, but there isn't so much sign of it yet. There's no dip buying going on as of yet. Because the problem with Smiths is this is the North American division supposed to be one of the big drivers of growth, or the airlines, and the airport sort of concessions they've got, which they must pay a fortune for, by the way, because of the footfall. But this is supposed to be their growth story. It's not about the high street. Now, they've left the UK high street after however many decades, more than a century, isn't it, or something. But it's never good to have to release an RNS that says there's accounting. We think there's an issue with the accounting, and we've had to call in the accountants, and they're going to restate profits. So a very, very nasty candle there. 42% down was the closing on Doge, which takes it right back to March of 2020. So. And it was already losing ground heavily. Shares peaked post-COVID in March 2021 at about £19.80, just below £20 a share, and it's lost ground since then. But yesterday was the impressive shove. But I think it will be interesting to think, oh, this is where it bottomed in 2020. It's a much leaner company now. It's shed itself the underperforming high street division. Is it overdone? It's a very dangerous question to ask, and it's not one for widows and orphans or jumping in blindly, but maybe we'll see something emerge in the next few days.
Yeah, at the moment it still looks a bit like trying to catch a falling knife there.
Yes, exactly.
Speaking of which, we have had, of course, lots of overnight news. One of them that piqued my interest, of course, other than the Jackson Hole previews that we find across the internet, is did you see the story about the chief of Microsoft's AI division saying that there are increasing signs of hallucinations? And Phil, I don't know whether you can throw this up. It's in the Times newspaper. There we are. Mustafa Suleiman saying chatbots are causing psychosis. What do you make of that?
Yeah, AI psychosis. If the people just keep talking to ChatGPT, and the thing is, I think it's been shown that AI, the systems that people are using tend to respond with praise. They tend to sort of they don't ever say anything contrary. It's like talking to Putin. You don't ever say anything rude to him.
They don't ever push back.
No, exactly, and that's that. I was reading the BBC report that somebody thought they were going to become a multi-millionaire because the chatbot was giving him references in his suit against his employer and all this kind of thing. And it's just the AI is validating what people tell it, and it's not good. I think
in this instance, if you scroll down that story, it got to the point where someone was asking ChatGPT, and got to the point where after a lot of ChatGPT, agreeing with it, came up some crazy figure like, yes, you ought to be earning, commanding something like 6 billion. It was a very large figure, salary. So interesting stuff there. Let's cross over to the Financial Times as well, because this is something that's very close, something I watch very closely, because for those of you that aren't aware, we've got the first episode of Decoding Crypto with head of Tasty Cryptos, Ryan Grace, now on the YouTube platform under playlist. On the FT site, the EU speeding up plans for a digital euro after the US passes the stablecoin law. Now, this is not a surprise. What was a surprise was that the US passed the stablecoin law so quickly.
Yeah, I think this is the caught them on the hop, isn't it? Really, that suddenly you've got this full-on rush to a stablecoin in the US. Thought it would be years away. And now it looks like we've got this, that the dollar, already being the world's reserve currency, is going to be the denomination for all these tokens. And it's essentially the EU saying we need the digital euro to protect ourselves, to protect the dollars, the euro across the continent. So that's the key thing, really.
Yeah. What this article fails to also underline is that all central banks have been working on their own digital version of, their own currency. So the ECB is not alone. Bank of England has been developing theirs for years and years, and now, and they're not going to want to have these cryptos or stable coins, freely used, without any sort of bank oversight. However, in the US, I wonder how they do it, because in Chicago, summer last year, there were already coffee shops, Chris, that were taking payment in crypto.
So what percentage of Bitcoin now is a coffee in the US? It's very tiny. Anyway, yes, I think it is the way.
I never saw anyone pay with it though. It was just advertised on
Well, there you
the
go.
front. Yeah.
I think that this is maybe a slight problem with us, because we live in this kind of, we live on the sort of what you call the frontier of this kind of thing, and we're always on Twitter and we're reading the FT. How many people outside of that rather small London and New York financial bubble are actually using crypto? Yes, it is becoming much more widespread, but is it becoming mainstream? That's another question entirely.
Yeah, so it's one that puzzles me, because yeah, I don't see it becoming mainstream just yet, but you know, these things tend to creep up on you. Looking elsewhere, lots and lots of chatter about whether or not, you know, this tech fright is now calming. Of course, everyone's looking at Jackson Hole. What do you make of the whole rotation conversation that we had earlier this week? You know, are we seeing a real rotation to defensives and other lesser, you know, loved stocks out of tech, or do you think, you know, this is just froth being taken off the market?
I think it's still just the froth. I think you have seen, if you look at the the moves this week, the losses have been heaviest in tech, where you have seen a bit of recoveries in Chinese markets. So that's interesting. Are they leading the way? But yes, the biggest thing has been in the Mag 7 and in AI because of these reports. Now, was the rotation going on before the MIT report and before Sam Altman's comments, or was it driven by it? I think it's chicken and egg, but it's certainly the case that this week has seen that rotation, and that's healthy in bull markets. You cannot always have the same names leading all the time. They need to lead most of the time. That's how this works. But you will have periods where others take over. Notably, of course, the FTSE 100 record high this week, the ASX 200 record high this week, and it was saying, well, is this is the end of the AI rally? Probably not. But you're just having people shift away from the time being from the US, which argue perhaps in certainly tech has gone too far too fast, and then you're looking again longing at the FTSE on 15 times earnings or whatever, and a 4% yield for the index, and thinking, oh, actually, that does look good value, and I'll put some money back to work in there. But you have started to see that kind of movement. I wouldn't count out the tech rally just yet. We were 1,000 points higher on the Nasdaq in the space of 2 weeks since it bottomed at the beginning of August and didn't look back, and so it's not surprising to see it come off quite a bit. And the Powell speech is clearly the excuse to continue to de-risk in the short term. But it's if you look at seasonality, if you look at what normally happens to the S&P in a post-election year, if it is going to weaken, then about now wouldn't be surprising. And so it would kind of chime nicely with what we're seeing, and then it will start to get going again, probably from early October. So you could be in for a bit more of a downside in September. Maybe the August bounce gets wiped out entirely, and then we reassess over the next 6 weeks.
Of course, the other big thing that could rock markets, trader friends, is Nvidia's earnings, and that is out the day after my birthday.
Oh, is it your birthday next week? There you go.
Nice little treat. Just just after my birthday on the 27th is when we are expecting Nvidia's results. And just for you all trader friends, I had been asking all week, ask Chris, when are we going to get the Nvidia preview? When are we going to get the Nvidia preview? Well, we do have it here. I'm going to put it onto my screen. If you type Nvidia, IG, and Fabian, yep, she's one of our market analysts over it's Australia, isn't it, Chris?
Yeah, she's Australia emerging markets, yeah.
Yeah, so we've got a Nvidia preview there for you, written by her. What will be interesting, of course, will be the AI story, whether we're going to see more growth there, and that US-China deal. Yes. Will this, create more growth for Nvidia, or actually are we going to see more issues as we get more and more reports the last few weeks about how that H20 chip is not as good, and China's hit back saying that it's not happy with this, and China's triggered this $4.5 billion charge. Yes,
the Lutnick comments. He said we don't sell them the good stuff, we sell them the rubbish, and they understandably he can offend.
I mean, Lutnick's just got away with words.
Oh,
right?
He's hopeless. They're just, I forget what they call him now, but yeah, we don't sell them our best stuff or our second best stuff, not even our third best. I mean, God knows what it was like working
talk about
for
rubbing
him.
it in.
Yeah, exactly. And it essentially saying that they were doing it to get them addicted to American technology. And it has gone down like a lead balloon, or whatever the Chinese equivalent of a lead balloon is, very, very badly. And so that will be interesting because NVIDIA's furiously trying to shore up its position in China after all the excitement of the past 4 months. And then the US Commerce Secretary comes in and just knocks it all over again. So it will just intensify China's already existing push to diversify itself away from
Wouldn't you love to be the fly on the wall between Lutnick and Jensen Huang after that CNBC interview?
Exactly. Can you imagine? He will be absolutely furious, but not much he can do because Lutnick will go running to the White House for defense. But
To
it's
Orange
impressive,
Man.
really. Yeah. Of course, this is after the reports that NVIDIA will now pay the US government some of its China revenue. This is a different world from where we were a year ago. You have this kind of it's mercantilist. I think that's the word for it. This is back to the 18th century of trying to claim yourself a bigger slice of the pie rather than trying to grow the pie of global trade. I think is the way to look at it. And that's exactly what it is. But yes, that was the story of the week, really. Jensen and the poor old Jensen Huang getting his efforts torpedoed by the Commerce Secretary.
Yeah, of course, Jensen is very, very keen on, keeping China hooked on its chips because it itself is developing the Halo safety systems, and of course, its own chips are designed for humanoids. All this ties back to the fact that we're going to need lots and lots of humanoids if we're going to go forth into space. Elon Musk, who keeps wearing that hat that says Mars, if we're going to start living on different planets. Why would you do that? I don't know, but I'm quite happy with Earth. That's my own view. But yeah, in terms of NVIDIA, keep an eye out for what it says about tariffs, of course, and also that deal between the US and China to find out how this is going to impact growth in the future. It's all about expansion, not just in China, but also look out for any confirmation of significant deals in Europe and the Middle East as well, because Saudi Arabia is eyeing a big deal with the GB300 Blackwell chips. These are the super fast, next generation, next revenue growth streams for NVIDIA.
Yeah, and you should look at, I think, the average move in results there has been about 5% over the last 5 or 6 results. We have seen it move historically much wider, but the average move is about 5%. And I think the options pricing in from off the top of my head is about expecting a 5% move. You've got to be careful in NVIDIA because the last time we had earnings, it gets hyped up so much. It's the big event of the week. It's anything to care about. And it probably is the only thing to care about next week, looking at the week ahead. And then nothing happens. So you always be careful. It's always, when everyone says, oh, this is the event of the week, it will be volatile. It doesn't always live up to that expectation. But it is the most important. It's the last big thing of earnings season. And then that's it, really, I think.
Yeah. And just showing you the chart there, nicely put together by Fabian. You see the red there, that's the US. The turquoise is Singapore. The magenta is Taiwan. And the yellow is China, and the orange is other. And in the coming years, the expectation is NVIDIA is going to try and grow the top colors there so that it's not as reliant on the US market. Of course, there are lots and lots of challenges. Of course, talked about US and China already, but also incoming competition from Chinese-made chips as well. Price target there, as per the report, improving from 163 to 191 currently, and suggesting some 9% upside from current levels. So for those of you watching out for NVIDIA results, it will be out next week, the biggie next week. Speaking of which, loads of people on the chat, Chris, asking about where you think markets are going to go next week. Do you think maybe we might see further upward momentum for the FTSE and the DAX?
For the FTSE, it's interesting because it might be pushing on a string if you get the rotation starting to reverse. It's very much dependent on what he says today, I think. Powell speech is the kind of thing everyone's just waiting for to get out of the way. And then you've got a long weekend in the UK. I think you've got likelihood of further upside for the FTSE 100 in the medium term. It's been a very solid rally the last couple of months. So I think if you're looking to the year end, yes. But if you in the next couple of weeks, maybe it's got a choppier time ahead of it. Will you get some dip buying finally coming in the US to try and lift this stuff off its recent, poor performance this week? Then that's entirely plausible. I think if you look at the S&P, you've had a defense of about 63.50 over the last 2 or 3 days. Maybe there'll be a floor if he comes out dovish. If you get a very hawkish Powell today, watch the dollar. Watch that surge to the upside, because the positioning of the dollar is still quite heavily crowded to the short side. And that means I think if you're looking at something like euro dollar, maybe you've got potential for more weakness there. And then indices, signs of recovery. And it still feels like a very low volatility environment. Yes, I know there's the risk of tariffs, all this kind of thing. But we've had a bit of a bounce in the VIX this week, but it still feels like, to be honest, the second half of 2017, which was a very calm year, and you didn't have much of a sell-off. I think the average drop so far this year is still relatively contained, even if you include April. So overall, I think you've maybe got further optimism for some more markets upside.
Right, lots of people on the chat. Shrimp Fred asking about your location. Has Chris got a smoothing filter on? Looks like he is in his 20s today.
Well, that must be the new camera or a different camera.
And then I think that's Boise that said that. And then Shrimp Fred saying thought he was filming from his bathroom with the great lights up there. We're going to have Guess the Chart next with two subscribers away from 1,500. So get one more subscriber. So come on, people. I want you to slam that like and subscribe button to get us to 1,500 after we get back from Guess the Chart.
Ladies and gentlemen, the market opens in 5, 4, 3, 2.
There's a chart on the screen,
and it's looking real mean.
A symmetrical wedge or a sideways machine. I've got my mouse, I've got my dreams, but I've no clue what this madness means. Is it crypto? Is it crude? Is it volatile or just rude? There's a wick on top and a tail below. Is it time to buy or let it go? Snap that trend line, check that zone, draw a fib from peak to bone. Everyone's got a different chart, but only one will steal your heart. Guess the chart. It's a game of risk and art, like a fortune teller's dart. Throw your guess and play your part. Producer Phil's in the corner grooving. He swears the 20 EMA is moving. Rich calls pump while Ain shouts trap. Then they both run off to draw a gap.
Hey, welcome back to Opening Bell with Chris and myself. Wow, what did you think of that tune, Chris?
Where on earth have you found that from? That's very impressive. I don't even know what it is. Who is it?
It's created by a song AI, and
Thought it might
yeah.
be. How
Yes, and
depressing.
James Watson, one of our gallery people, and he has great fun after every show putting together songs for Guess the Chart.
Wow.
Yeah,
Very
and we
good.
have a winner. We have a winner of Guess the Chart. It is Hamish yet again. Hamish is on fire. Yeah, for eBay. We've got 20 seconds to open. 10 seconds now. You ready on our digital bell buzzer, Chris?
Oh, and
Lots.
is someone give me a bell buzzer?
That we're looking at. 3, 2, 1. Ding, ding, ding. Here we go, trader friends. And it is looking like a risk off Friday at the moment, ahead of Jackson Hole. Let's have a quick look at the indices there. The FTSE and also the CAC 40 down slightly there. Germany 40 also tipping a bit lower. Let's have Chris take a look at the individual movers for us now. This is the FTSE. Right, take us through the losers list, Chris.
So far, we've got Croda leading to the downside of 70 basis points, Sage Group as well, and the LSE down by 50 basis points. It's just contained. There were no RNSs of any note this morning, so there's not much to talk about on the downside, actually. Compass Group 0.4% off, Rightmove 0.4%. Intercontinental Hotels, another sort of heavy stock, found 0.3%, and that's about it, really, I think, really. But quite a bit of the index moving off the downside, if only by a modest amount.
Yeah, let's have a look on the gainers list there. Standard Chartered up at the top of the leaders list, up 3%. We've got BP as well, moving slightly higher, but BP has been punished the last few months or so as well. Lloyd's Banking Group, some of the banking names are a bit higher today. And the miners as well, not by much though, it's more so a down day there. Moving across to Germany, let's head to Germany. Yoga, you with us this morning? Yoga is normally here bright and early. Right, let's have a look at the losers list first. Any of those names pop out to you, Chris?
Hang on, I'm trying to...
Got Commerzbank there down
1.5%. Miserable start to the day for them. Interesting that you're not getting the strength in UK banks replicated on the continent this morning. And then Siemens as well, 0.9%, nearly 1% down in early trading.
Let's have a look at the winners. Not that many, but let's just have a look as well. Total Energies up 0.75% there. Rheinmetall still recovering, licking its wounds there after falling after Trump and Zelensky spoke. Fresenius is up slightly, and some of the car makers, after being beaten down recently, also coming back slightly. So Mercedes, Porsche, and Volkswagen up a touch. Right, let's head over to France as well. Here are the top movers in France, starting with the losers. Chris?
You have to zoom in for me. I can't see that. Airbus now 0.3, and ST Micro again, another 0.3% drop for them. So that's all. Not joining in Rheinmetall's move to the upside in early trade this morning. There's another bit of a divergence, and more tough times for the car firms. Renault flat in early trading. Let's not to be too cruel now.
Let's have a look at the winners list. Hermes down slightly as well. So luxury hasn't had a happy time recently. Let's have a look at the losers list there. Airbus down 0.25% there. And we are also seeing some of the defense names little lower. Safran, Dassault Systems as well, lower after Trump, very vocally said he wanted more of the defense spend, moved towards US contractors. Otherwise, quite a quiet day. Perhaps everyone's sort of sitting on their hands ahead of JP.
I think so. I think that's definitely the way to view it. There wasn't very much in the way of news this morning. It's a Friday in August. It's not the last Friday in August, is it? But it's before the bank holiday in the UK. There's no drivers, unfortunately, this morning. You had retail sales to UK. What were they? I didn't even see the numbers this morning for them. How did they come in? Did we see those?
Some of the retailers.
From them? Retail sales for the UK. Oh no, we didn't have retail. I thought we did this morning.
No, that was earlier in the week.
Oh, I must have made the thought out of nowhere. So yes, you've got a Trump speech at 5 p.m. this afternoon, so that could be anything. And don't forget as well, all this talk about Powell speaking, but tomorrow you've got to stay out for the fun one, which is 10:30 in the morning. 10:30 in the morning their time, so about 5 p.m. our time, I think. Bailey, Lagarde, and Ueda, the Bank of Japan, will be speaking, but I don't think anybody really cares about what they've got to say, to be honest with you.
Yeah, I am probably going to be driving at that time, so I'm not going to be up at that time. Just taking a look elsewhere, pretty calm there. And one of the key things to be watching out for as well is, of course, positioning ahead of next week, which we will have tons of earnings, not forgetting, of course, the big one being NVIDIA, trader friends. But we also have loads of results from, I believe, CrowdStrike, HP, Snowflake, Agilent Technologies as well. Tuesday, MongoDB is out with numbers. You heard Shard Capital's Julian Wheeler here talking about that with us. This comes at a time when US stock indices, have seen a slight rotation from tech to some of the more unloved names. Healthcare sector, interestingly enough, Chris, is the leading sector so far in August.
Okay, so it's still a bit of that's another strong performer, though, isn't it? I think there's a lot of money flowing back into there, if only because of, I think, the strong revenue generation you've had. So that's definitely one to watch, see if that strength continues, and a nice alternative to just the tech trade that dominates everything else.
And oil sector is amongst the weakest. Right, we're going to wrap here because we've got Pete Ward coming up next to do Fast Markets with me. Thank you so much, Chris, and have a fabulous weekend. Of course, I'll be watching when JP starts speaking with you. And yeah, please do bomb me a message if you see anything funny happen before then.
Will do. Have a good weekend.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Hey, Pete, how are you?
Hey, Ange. Yeah, I'm good. How are you doing?
Yeah, really good. Good to see you too. And so nice to have someone that we're normally in the studio with online here. Feels a bit strange, doesn't it? Normally we're sat side by side.
Feel a bit distant.
So you have distant. What is not distant is those Nvidia earnings that are coming up next week. Chris
That's
saying
right.
that
Yeah.
perhaps so much is baked in that be careful. We might then see disappointment or the numbers not coming strong enough, and then nothing happens to share price, so it falls slightly. What do you think is going to happen?
Yeah. Well, I mean, the expectation I think is that revenue is going to be about $46 billion, which is like 52% year-on-year growth. But the big issue, I suppose, or the big thing at the moment is the news kind of overnight that they might potentially be halting the export of this H20 chip, which I think they're expecting to derive a lot of their revenues from. So this was a chip I think that was originally halted any export back in April, and then they lifted that in August with some kind of deal. I think AMD and Nvidia basically come up with a deal whereby they'd share some of the revenue on the sales to China with the US government. I think 15% potentially. And yeah, so basically overnight they put a halt on that. And it says here that they were ordered to halt H20 chip production. The information reported Thursday night, so indicating that the stock will be lower once we come on at 9 o'clock with the pre-market all sessions. So yeah, we'll have to see how that kind of plays out, I guess. But yeah, all the bits and pieces that I've been reading about Nvidia's earnings next week. That is kind of a major factor is the exports with China, because I think that they make up something like 13-14% of all their numbers.
Yeah, it's huge, and also it's a big growth market for Jensen Huang, given that China is using that H20 to power a lot of its H20 products or an AI developed products. China, as our trader friends all know, very big manufacturing power for all things mechanized machinery, right? All those things will need a lot of chips to make them AI enabled. It's also interesting that, we've got the story also from Boohoo. I saw this overnight. This is about the debt deal that you want to talk about.
Yeah, so this was a deal that came in yesterday. So it was effectively news that hit the market yesterday. And we saw recently, I mean, if you look at the stock price on Boohoo, it's just crazy. If you go back to, daily, or even if you go out to monthly, we were up at like £4.50 or something, I think, back in June of 2020. Obviously, a lot of capitulation since then. Various different issues with their supply chains, various different issues with getting their numbers out and whatnot. But they were sitting kind of comfortably around the 30p level. They felt fairly pinned there, and then all of a sudden the floor kind of came out down to 20, down to 15, down to 13.5 a couple of days ago. And now rallied about 15-20% off that bottom on the news yesterday. They basically got a successful refinancing of their facility of 175 million until 2028, with a view from their CEO that they're going to sort of do this big global turnaround in what they've got. But I mean, I was looking at what they own now. I mean, they've got a fairly impressive brand portfolio. Some of the big names that used to be on the high street: Karen Millen, Coast, Debenhams, Warehouse, Burton's, all that sort of stuff. It's just whether they can kind of combine all of that and work in the online space to make it an actual profitable revenue generating large company again. But at 15p, I mean, it's definitely struggling. But I mean, I mentioned it this morning just because it used to be a firm favorite amongst our traders who used to trade a retail basket of these: THG, ASOS. I mean, you can pick any one of those three stocks, and the charts are pretty ugly. Basis current, basis recent moves. So it'd be interesting to see if that is the floor, and now they've got this in place, it starts to have a little turnaround, and you start to see some growth. But yeah, it's certainly a very unloved stock at the moment.
To me, this stock has always been short, especially after that lockdown period as well. And it's fast fashion, isn't it? But what really killed it for me was when the whole Debenhams thing came up, and it's called like Debenhams Group now, isn't it?
It's called the ticker's changed to Debs, DEBS instead of Boo. So it's effectively moving on that name and that brand, which did have.
When was the last time anyone went into Debenhams? I quizzed Luke on the day that happened, and Luke was like, knock off. knockoff bed linen, maybe. You know.
Yeah, no, I know. Yeah, it was. It's kind of all these things that were once the darling of the, the high street, and
Yeah.
now kind of all put together in one basket. But I guess they need to try and make headway on the in the online space. And obviously, like you say, you mentioned during COVID, it was pretty popular. And then they brought in some new things as well with the business with regards to paying for returns. To try and sort of fly in the face of all the kind of bad press that you get people that just buy like 5 or 6 different sizes of the same thing and send it all back. So they were one of the first to kind of come in and try and do that, to try and stem that sort of kind of wasteful behaviour, I suppose. But yeah, no, yet to buck the trend, but we'll see. Interesting development anyway yesterday, in one of the UK names that we used to see a lot of business in. And
My
then,
humble
yeah,
opinion is you're gonna have to wait a while, Pete. Wait a while if you're thinking it's gonna
Yeah.
buck the trend.
I think you might be
Right.
right.
British American Tobacco, sin stock. We
Yeah,
talk about this
so
quite a bit with
yeah,
ISA.
we do, and it's defined as a UK defensive, right? A steady Eddie stock, etc. But if we look at how it's behaved recently, it's been pretty impressive. If we look at the move, like I've been looking at the moves basis over this week, or even just since Wednesday, and we've had the FTSE move on from Wednesday to today, 1.5%, so 140 points north. If you benchmark that against the European indices or some of the US ones, it's really outperformed. And so what we've seen this week, the key theme really has been like a rotation out of some of the chip AI tech stocks, which have done so well over recent weeks and months, and movements now where it seems like money's flying back into the UK. And it reminds me of what we saw back in March before the tariff crash in April. We saw a huge push on the FTSE from like 82 up to 8,800. And a lot of people were scratching their heads, kind of wondering what was driving it. And the general answer was that there was money flying into UK stocks, UK names. And it feels similar again, where people are kind of, the pace is running out in some of the other names where they've had great growth, and they're going, right, okay, where's now a good place to put some things which aren't AI driven or aren't tech stock specific, or do pay a decent dividend. And
This does pay a decent dividend.
So you look at BATS, and you look at United Utilities, and you look at all those sort of ones that go in that basket of UK defensives. And since Wednesday alone, these are both those names are up 3.5%, 4%, which is quite a large move for companies of this size, especially in the UK market, where an interesting day is if Lloyd's moves maybe 1%. It's not the Nasdaq. Things do move slower. So that kind of that rotation or that movement that we've seen is definitely evident if you look at BATS or you look at United Utilities, and then you look at the FTSE chart. It's effectively mapping it. And so it'd be interesting to see if it continues. I mean, the sort of counter to that movement, if you look at what's been coming down across the pond.
I think you're right. I think you're right that there is money, looking to park itself in perceived safer indices, and ones that are likely to weather a potential correction. But let's have a look at the FTSE
and pay you a dividend for doing so.
And
so
pay you a nice dividend.
If we look from like Wednesday, for example, maybe go on like a 4-hour chart or something, you'll see here that spike there from like 91.60. It basically just took off and didn't really look back. It went 91.60, and then the next thing you know, you're at 9300. And again, a bit of head scratching going on with what's going on in the world at the moment with the Jackson Hole symposium at the moment, the Powell speech at 3, all of the different things that are going on at a time. We're now hitting all-time highs in the UK market. So it's whether or not people are kind of fearing the unknown over there and going, right, let's get into some safer plays over here. And there's been just a rotation out, get some dividend yield, get some stocks, whereby maybe the growth hasn't been that big. Because, even still relative to our European peers like the DAX, or across the pond, and you look at the Nasdaq and the S&P, the performance of the FTSE is still, it's still percentage-wise, it's still got more room to go, and more room to grow up. So yeah, no, it's interesting times.
I like it. Also, I think that I like that British American tobacco point that you're making, because this does look like it's mostly due to rotation, because British American tobacco in itself, although the share price has been moving higher, trader friends, bear in mind that BAT has been coming under increasing pressure from the unregulated first-time vapes. And so it is doing something quite remarkable. It is looking at making a U-turn and trying to work with governments to regulate this market, which is sort of counterintuitive when you hear reports of a tobacco maker working with regulators. You kind of sit up and go, what did you just say? And so they have been creamed by the cheap, the ones that come in weird flavors like rainbow and Candy Crush. And not that I know, but they sell it everywhere.
So I'm told.
So I'm told. Cookie butter. Those and yet it is moving strongly higher there on the daily chart. Really interesting one on that. Palantir.
Yeah,
we saw that finally.
Beast.
Rich and Piers and everyone cheering when that moment came.
Yeah, a collective sigh of relief from being squeezed. I mean, Wednesday to Wednesday, so if we go out from last week to this week, we dropped 24.5%, which is massive, for a stock of this size. But you then have to look at it and go, okay, it was trading 950 times earnings. It was trading on a huge multiple. It was on an absolute rip. I think they had the numbers and it came out strong, and it kicked on, and then it became the FOMO trade where everyone was like, oh, I need to buy this, and that pushed it ever higher. But yeah, I mean, it's pulled back a bit, but if we look at where it's come from, I remember talking to clients about this when it was $15. It then shot to $30, $60. I just couldn't bring myself to buy any, and then next thing you know, it's at 90, then it's at 150. And
there's someone who bought it 7
in April. Really? Wowza.
Yeah,
that's awesome. Yeah, no, I was speaking to a share dealing client of mine actually the other day. I was having a look at their portfolio, and I saw that they had this at 18 in the share dealing, and obviously it was trading at 180. And I was like, you've now got effectively the age old 10 bagger. So it's just, when do you come out? I suppose you keep thinking, it's going to go. I think if you get to that sort of metric, you got to probably take your initial investment out at least, and then run the rest, I suppose. But yeah, no, it's difficult to know. But that move in a week is sharp, but it shows how much it did rise. I mean, that chart shows it perfectly. The speed of coming down, pretty much the speed at which it popped that high. So yeah, it's certainly one to watch. I was on to a client of mine yesterday who's based over in the States, and he hates the stock. He thinks within 12 months we'll be seeing $30-$40. Which is super bearish and very much, contrarian against the general beat the drum out there at the moment, because it's all government contracts and more money for defense, more money for drones, more money for all that sort of stuff. So I don't fully buy into his $30-$40 metrics, but that's what makes the market, Angie.
Yeah, that's what makes the market. Differing views. I've seen 40 being bandied about as well. Those moves there that I have highlighted for you, trader friends, in that 6-session slide there, some $70 billion shed off its market value. This is a rare boost to short sellers that have struggled against one of top performance on Wall Street this year. So there is still, an interesting note out there. Those of you that watch this stock, I highly recommend you check in on Seeking Alpha, because it talks about, potential signs to look out for when short sellers may be starting to return to the stock, and what comes next. Speaking of which, what comes next for your day ahead? Pete, what are you up to today?
So I'm just working half day today and then jumping in the car with the family. We're going to Norfolk for the long weekend for the bank holiday with
Nice.
another family, so that should be nice.
I'm
What
going to
about
jump in the
yourself?
car too. Yeah. And just a heads up, there is expected to be bank holiday weekend disruptions, and also on the railways as well. For those of you jumping onto a train, Phil, what were you saying on the? He said he was making a joke. Yeah. So I think it's the line between Norfolk and Cornwall, something like that, having disruptions on the train.
That's some that's some line.
Yeah, that
That's
is some
one
line.
end of the country
I
to. I
got
don't
that
think
right.
that line exists.
BBC, where is it? Have I got one place wrong? My as you can tell, my UK geography is terrible.
Yeah.
Right. So here we are, Cornwall. Cornwall to
Cornwall
from
to Newquay, maybe?
Aberdeen, from
Oh, from
Aberdeen to
Aberdeen.
Cornwall. There we are.
Jeez. Yeah, that's a long way as well. But yeah,
That's
no,
a long
typically,
way, right? That's when I read it, I was like,
the lines they tend to run north to south as opposed to east to west on the train. So you wouldn't
I
get
wish there wasn't
Cornwall to
east to
Norfolk. Yeah.
Right. On that note, I'm
Right.
going to leave you to it because we are going to have Bill Blaine coming up soon.
Cool.
Thanks so
All
much,
right. Have a
Pete.
good one. Cheers, Angie. Thank you. Cheers all.
All right.
Bye.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome back, all of you. We've got the one, the only Bill Blaine here from Windshift Capital. Hey, Bill, how are you?
Good morning. I am just fine and dandy. Tickety-boo, I would say.
Ah, are you tickety-booing on the boat or you're on dry land now?
No, I've been away sailing for most of August. That's how my wife and I take our holidays. We used to race yachts. Now we just go cruising. And it's been fascinating. The weather since Monday has been terrible for yachtsmen. I know it's been warm here. That was a picture from the boat yesterday as we tried to get back to our home port near Southampton. But as always, I was working while I was sailing. And if you go to the next photo, which I'll admit is not brilliant now, that was taken from quite a distance. Now, that is a worrying photo to me because that is one of the world's largest container ships. And anyone who knows anything about boats will say, hang on, it's half empty. Now, container ships should never be empty. They should always have, because they just go into a port and they pick up whatever containers are going to the next one. But that one's on its way into Southampton, one of the biggest container ports in the UK, and it's clearly not full. Now, flip to the next photo. And that's another boat coming out of Southampton. Now, that one looks fuller, but if you take a look at the water line, which might not be clear, but especially that bow at the front, you can see the bulb is right out of the water, which again tells you it's only about 3/4 full. Now, that's worrying in terms of global trade. And then if we flip to the Shanghai Container Index, if we can get that, not sure we can, but look, the Shanghai Container Index is a great measure of the amount of trade that we're doing out of, especially between the US and China, but also between Europe and China. You can basically see the price of a container going from China or from anywhere else to China and get a very good idea. Now, following Trump's tariffs, that index absolutely collapsed. It was very, very cheap to get a container. Boats were empty. There was lots of people saying that the US West Coast ports were all empty because of a collapse in trade with China. Now, after Trump and Xi agreed not to tariff each other, and there was all the chat about sorting everything out, the index climbed again. But guess what? For the last 6 weeks, it's been crashing. And sure enough, that results in global trade disruption. And I suspect the photos I took yesterday of half-empty container ships is a hint about just where the global economy is going.
Do you think it's going to get much worse before it gets better?
I don't think it's going to get much worse because things are never as bad as we fear. They unfortunately are seldom as good as we hope. One of my key market mantras. But I certainly think there is going to be ongoing trade disruption. Now, as we all know, trade disruption creates a whole series of negative consequences, one of which is going to be inflation. And of course, the big story today is going to be Jerome Powell speaking at the conference in the US. And whatever he says, it's very difficult to argue that there is not going to be an inflationary impulse in the US, and that's going to knock on everywhere else.
Is there definitely, in your view, that there's not going to be this big inflationary push in the US? Do you think they've got enough there to soak up this inflationary push higher? We talked about lots of people there still in the higher income base that still have a lot of savings, and these people have yet to tap into their borrowing.
I think soak up is an excellent word to use, Angeline. Fantastic word, because I was reading some research over the week, and it was talking about how the inflation effects have been constrained in the US. And that's happened because initially, when you apply tariffs, companies want to keep selling. So they absorb as much of the tariff increase as possible. But then over time, they start to increase prices. And what it showed was over 6 months, the entire cost of that tariff will be fed into their prices generally. So it takes 6 months for a price of a tariff to be totally reflected in the economy. Now, the second side of that equation is your comments about, don't the US consumers still have money hidden away, squirreled away, ready to spend in the case of disaster? Well, if you take a look at some of the other indications that are coming out of the States just now, especially a fantastic comment made by Torsten Slok, who is the chief economist of Apollo, one of the biggest funds now, very successful fund, one that I certainly follow very, very closely. Now, Torsten Slok has made the comment that Americans who have student loans have had to start repaying them, and the delinquency rate has risen to 25%. That does not speak of a US consumer that has loads and loads of money ready to bear the costs of higher tariffs. So I do expect to see inflation remain significant. It's not going to be as devastating as people thought, but it's going to be a driver. And the key thing to think about there is if you have 3% inflation ongoing, it acts just like compound interest. So if you're a bond buyer and you buy a 10-year government bond today, and we end up with 3% rather than 2% inflation, if we end up with 3% inflation in 10 years' time, that bond is only worth 70-odd% of what it would be worth today. And that will keep away buyers from the US, from the middle to long end of the US Treasury market, which then creates the problem. What happens if suddenly there's a buyer strike at the short end? So, inflation is very significant, not only for how the economy functions and who's buying stuff, but also the critical element of who is going to fund the US budget deficit, because tariffs are not going to cure it.
There are also signs, Bill, from the consumer end of things that show that demand is still robust. So the Hiltons, the Hyatts, Expedia, all lifting their outlooks again. We also have heard from international IHG. They keep changing their name, but it's now IHG instead of International Hotels Group. And even they are saying that despite earlier this year when they scaled back forecasts, actually the summer has been relatively good, and demand is quite strong so far, especially from the higher premium end.
That's very interesting, because one of the things we saw was people changing their plans for holidays. People have not been going to the States in the same numbers they have. That's great news for Europe. And certainly, anecdotally, I can tell you that some of the places I was visiting on the south coast of England this year were, these are beautiful villages on the coast. They were less busy than I'm told they've been in the past. Now, I tend to go sailing along the south coast every August, and some years it's absolutely busy. This year it was certainly quieter. And we're also seeing some of the pressure on airlines. Now, I suspect that what you've just described in terms of things are holding up better is really a reflection of the fact that inflation did not suddenly bite after tariffs were announced, but is going to take time. And the reason it's going to take time is because, as we just discussed, companies will take time to let that soak into the economy. Great word, I'm going to use it, Angeline. I know you came up with it, but soaking economy is going to be a new phrase. And the second thing is, of course, we've got to remember that before the tariffs were imposed, US importers built up massive amounts of inventory.
That's right. That's right. In
Now,
January, February, early on the
now
year.
that might explain why the index for the Shanghai Container Index has started to tumble, because the inventory is still all there, and there was a second build-up once we saw the agreement between Trump and Xi through Besant to scale back the tariffs. But it's clear, I think, that we don't know, but the indications are all that we are going to see an inflationary effect, and we are going to see ongoing trade disruption. And the fact that I was seeing half-empty container ships in the English Channel, that worries me about just how dislocated the whole global economy will be because of that. Because remember, what we saw during COVID was this massive dislocation in global trade. Now, putting that in context of today's market, where does that put us? It just means it's another factor to think about. Two things there: the inflationary effects of tariffs and the potential effect on the bond market. Add into that the fact that Jerome Powell speaks today, but he is under such pressure. I mean, the latest thing is Trump trying to snipe another of his governors. I'm trying to remember the lady's name, Cook, who apparently filled in a mortgage application incorrectly. And as a result, they are demanding that she's dismissed, which means, of course, that Trump can put his own nominee in place, which starts to get him close to having his own majority on the Fed. Hi, I seem to have lost you there, Angeline. Yeah. If you then go past that, where do we go in terms of the US market? If we get a surprisingly dovish response from the Fed today, what effect is that going to have on a US market, which, watching it this week, has looked frankly tired?
It has, and also, did you see that interesting report, Bill, about how, no matter what JP does, the certainty is that Trump will eventually get a committee that is pretty much Trumpian either way, right?
That is going to happen by May next year. We will have a Federal Reserve that is effectively, as I was going to say something rude there, is as flattering to Donald Trump's ambitions and requests as European leaders were earlier this week. And we haven't even touched on that yet.
No, we haven't. Funnily enough, the stuff that you're talking about, Bill, about, the consumer demand and travel, all that, the report does concur with you, because what it shows, once they crunch the data, this is on an FT article, is that nothing really changed for the wealthy Americans. And it's actually more Americans not just traveling, but traveling out of the US. Most wealthy, older Americans, a lot of the money is in stocks and their homes, right? And so when it comes to that, nothing much has changed, really.
I think that would be very incautious of you to say that nothing has changed. Yes, you're absolutely right.
The prices on the street may be higher, but if they, if they are looking at just until recently we saw this fears of a rotation last week, but generally markets, even after the April tariff tantrum, stocks have been heading higher.
Yeah, if you own stocks, you have done superbly well. The US market has, stunned us all with its recovery. And that certainly makes the generation of Americans that have decent stock portfolios, that have decent savings, it is certainly their propensity to save is definitely boosted by the strength of the stock market, because they feel richer. So they go off and they have a hotel vacation, or they go and have a cruise, or they fly to Europe and tell us how wonderful their president is. And they have the most wonderful time spending their money. But that is only a tiny little part of the US economy. And it's the rest of that economy that we need to think about, because these are the future workers and they do not have the same opportunities. And this
No, I
is certainly
agree.
true in the UK and Europe as well. They are just struggling. And that has longer term consequences. This goes into the whole debate about income inequality, which has been massively increased since the 2008 global financial crisis as a result of quantitative easing and other policies whereby interest rates were set too low. And the effect of setting interest rates so low was to make financial assets look more attractive. And so if you invested in 2008, you were effectively getting paid by lower interest rates to buy stocks because they looked more and more attractive compared to the very low rates that you'd get in the bond market. As I keep saying, the bond market is the critical thing. And that's one of the areas I'd continue to watch very, very carefully. If we see Jay Powell come in today and make some dovish comments about how they're going to, function in the future, because he's going to be making some major policy announcements there, then that is going to make the stock market go ballistic, but it is going to give the bond market the screaming heebie-jeebies that not only are we likely to see the independence of the Federal Reserve crushed in coming months, certainly I think by May, and I wouldn't be surprised if there are other Fed resignations once Trump starts to seize power there. And if that happens, then, I get really concerned about the US bond market. And if people like me are concerned about the bond market, I think at some point the stock market's going to correct.
I mean,
Which,
don't
of
get me
course,
wrong.
leads us on.
I think that the average American is feeling the crunch. The only reason why I say that we haven't seen it yet is because I'm going to use that word soak again. It's these, this layer of consumers, if you like, the higher income, super rich, lots of savings there, that are soaking up that, or delaying rather, that potential correction, if you like, in the whole consumer space to happen as when it should. I think it's really delayed it for the US economy. We will see cracks at some point, right? It's not going to be good forever.
You're absolutely bang on there, Angeline. I mean, the institutional sector of the US bond market has been trying to pull back from this rally for quite a while. And every time they've started shorting, they've been crushed by retail investors coming in and continuing to buy. And it's only recently, I think it was fascinating, you had the Palantir stock price up earlier. That's the first one where anyone's made any money by shorting a tech stock. Now, funnily enough, Palantir is one of the few tech stocks that I'm still thinking there's something we don't know here. Because I reckon this is a valuable company because we haven't really worked out exactly where it could potentially go. But all the other tech stocks are still feeding into this increasingly hollow-looking bubble that we've seen in AI. And the other thing that I've been sort of reading while letting the autopilot sail the yacht this week was all the eruptions within Facebook. I think you and I discussed about 3 weeks ago how the clearest indication of a frothy top was Facebook paying 200 million sign-up bonuses to some of the top AI folk in the world today. And then this week we see Zuckerberg saying, actually, we're going to hold back any further spending and we're going to look at our whole AI again. So, and then again this morning, I read that he just hired yet another guy out of Apple on a massive salary. So it's not entirely clear, but it does look to me that we're approaching something of a frothy top there. And you've then got to look at companies like Palantir here and say, look, this is going to be what AI is about, not announcing, hey, we've made we've made a fantastic AI product that you can try and use in your company. But companies like Palantir that actually look at data and use it and then say, this is how you change the world. because
And in
companies aren't
fact,
going to
it's
change the world themselves. They're going to be guided into it.
yeah. I mean, in fact, its software can deal with any sort of data set I've read, and so the McKinsey's. Those of you wanting some reading this weekend, take a look, and you can find it. Google McKinsey in AI, and McKinsey themselves have also said they're really worried about their existence with all this AI software coming into place. Just reminding our viewers of where we are at the moment. European equities remaining pretty much subdued as we count down to Jackson Hole, and of course that speech, that swan song, if you like, the final stand. Some say because it's the last time he's speaking there by JP. What will he say? Well, we won't have to wait too long because that is coming up in a couple of hours. And also, don't forget, we've got lots and lots of talk about whether or not we're seeing this rotation starting to take place. It's too early to say yet, but we did see a rise in consumer-facing sectors, and also oil prices lifted many energy stocks in the previous session. Defense stocks also came back slightly after a lot of selling pressure in a week on that expectations of the Ukraine-Russia peace deal. That's all gone quiet, Bill. What's happened?
One of the things I found myself doing while I was on my supposed sailing holiday was commenting quite a bit on the whole thing, the meeting in Alaska, and then the subsequent meeting in Washington with all the European leaders competing in terms of their flattery of the US president. And where has that actually got us? Well, it's quite clear that the Russians have agreed to absolutely nothing. It's clear that Trump has been unable to deliver anything that really moves us forward. So where does that leave us? Well, that I think is something that's going to be very significant for markets, because it's clear that it's going to be Europe that's going to be responsible for Ukraine. The Americans are very kindly going to sell European countries American hardware, which according to Besant will be marked up by 10% to give the US a profit on it. And we can then give that military hardware to the Ukrainians. Possibly much better idea if Europe just gets its act together and starts making weaponry to defend Ukraine properly itself, and starts to face up, man up, country up to the reality that it needs to be Europe that defends democracy, freedom, and peace in Europe by standing firm behind Ukraine. Now, one of the big issues that I think we really need to think about is exactly who Russia or what Russia is. Russia is not the behemoth that defeated the Nazis in 1945, where you had committed Soviet workers, students, whatever, all flocking to join the Red Army. Today, the Russian army is having to pay enormous bonuses to get underemployed Russians to join the services. And yes, they are learning and they're fighting better, and eventually they will do the Russian thing of steamrollering their way through. But that can be combated, because Russia is now a nation of 140 million people. They are 1/10 the size of the European economy. Per capita GDP is less than half the European average. And Ukraine itself is already well ahead of Russia. So economically, if Europe stands up, that's the only way that you're going to resolve this. But at what point do the Russians stop the war? Because it will be up to the Russians to stop the war. I think the only way we can really think about the last, 1 week since the Alaska meeting is lots of noise and absolutely zero outcome.
Yeah, which is not uncommon. They like to talk the talk, and I was highlighting this earlier in the week as well, to not jump to conclusions or to hope so much for a deal until the fat lady sings. That was on this show. Lots of people chiming in on the chat. Pelican saying, Scott and Bill, great guest. Thanks for coming on. A person saying investors are beginning to demand AI accountability on return on investment. That is right. That's what we talk about a lot here on the show with ISAR as well. At some point, Bill, right? At some point, that crazy capex has got to slow or start petering off, and we're not really seeing this just yet.
Yeah, there's I think that's a fascinating point. And it's something we've all been thinking about, I think, in the back of our minds almost since AI was invented, because those of us that lived through the dot-com crash and have then seen multiple other attempts, and I particularly remember Facebook renaming itself Meta to reflect the metaverse, where we were all going to work on these illusory metaverse businesses, and they just haven't happened. But at the end of the day, they all change everything. So AI will have a massively significant effect on everything that we do, but an awful lot of what we're seeing today is just pure hype. And absolutely, as soon as investors start demanding that kind of accountability, that's when you see the bubble pop. And that's when you wait for the collapse and you actually go in and buy the companies that really are going to make a substantial difference. Now, it is interesting to see who the winners and losers are. And everyone thinks that Apple is going to be one of the big losers because they just have not kept up, and they seem to be
they've been seen as being behind the curve.
Yeah, and I wonder if being behind the curve is somewhere a great place to be. Sometimes it is a great place to be.
What is it they say? The early bird catches the worm, but the early worm gets eaten.
Yeah, the early bird catches the worm, is the one about
but the early worm,
gets but the smarter bird goes to the market later, gets the worms cheap.
Yeah. So it's going to be an interesting one, because my view is that Apple will still be a very large player. Perhaps once the fight is done, it can step up and really start investing in the spaces that it knows has been making real money in the sector, rather than just investing without knowing where the revenue streams are going to come from. We have also quite a flat day across Europe here. We are counting down 3 more minutes to the oil sessions, but it is very muted as we wait on Powell's appearance later today at Jackson Hole across Europe. Just an update for all of you watching and joining just now. We've got chemicals, these stocks in this space being one of the biggest gainers here in Europe. DAX, the CAC, and also the FTSE all flat there. And if the momentum continues, we could be looking at a weekly rise for the Stock 600 of around 1%. Also, Akzo Nobel, one of the movers in Europe, one of the biggest movers. I'm just going to try and put that up for you. Do you like Akzo Nobel? Is this one that is in your portfolio, Bill?
I'm afraid it's not.
It is up more than 5%. Up more than 5% on news that the activist investor Cevian has taken more than 3% stake in the maker of Dulux. So those of you painting, I know Maturin is looking at a move at this point, maybe utilizing Dulux paint there in the near future. Also, Standard Chartered and many of the banks moving higher, bringing that up for you. Standard Chartered there. We checked on this earlier, was up 3%. It's up now by 3.6%. And Standard Chartered there, this move coming after the bank said it was a favorable ruling by the US DOJ in a long-running civil case. It had a favorable ruling. So, yeah, let's head to the break, and we'll be back for opening bell of all sessions.
If you're looking for flexible ways to trade financial markets,
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Hey, welcome to all sessions, and we are now off to the races. Let's have a look at how it's shaping up here. And as you saw across Europe, it is a pretty muted day over in the US. Let's have a look at some of the losers first. We have Lucid down almost 3% there. Nvidia is down 1.6% as well after all those reports surrounding the H20 chip there. Super microcomputer also down 1.2%, looking like the AI and the tech names not having such a good day ahead of that Jay Powell speech in Jackson Hole. Palantir, those that you stuck to your guns on that short, it's down almost 8% there as well. And we also have eBay down 0.5%. Let's have a crossover to the winners list, and we have NIO. Now remember, NIO is the premium end of the EVs made by the Chinese, and it is very, very volatile. So I will continue to check in on that later on as well. It's down 4.7% at the moment. Pinduoduo, another Chinese name, down 1.9, actually down 2%, let's call it. And Virgin Galactic also up 1.3%. PDD up almost 2% there. Novo Nordisk, interesting stuff there. We are seeing Novo Nordisk, this is the ADR all sessions, coming back there after a pretty tough week, perhaps underlining just how tricky it is still to make skinny pens and products that work. So all the talk of patents and pills destroying his business, maybe not just yet, because it is proving very resilient, and we're seeing lots of contenders having issues trying to get their peer drugs through. MicroStrategy is up 0.75%, and we also have Beyond Meat up 0.5% there. Beyond Meat often on the board here, but it is also another extremely volatile stock. Starbucks also up 0.33%. Looking across to my filter, it is pretty quiet out there, but we do have a few lines coming out. UBS Global Wealth Management forecasting Eurozone earnings for this year. This is Eurozone earnings rather, growth to contract 3%. That's from 0%. We also have some other upgrades and downgrades here. Novo Nordisk, Kepler Chevreux, cutting the target price there from 510 to 630. So otherwise, it's looking like pretty quiet start to the all sessions there. Do keep an eye on all of our updates on the IG Twitter page, and also on my Twitter page, where I'll be giving you the latest, hopefully from JP when he starts talking. Also a reminder for those of you, thank you very much for slamming the like and subscribe button, because are we at 1.5K yet, people? And Phil, if you can hear me. Well, I need one more person to slam the like and subscribe button. Come on, you can do it. Carry your cat and put the cat on the laptop and slam that like and subscribe button so we can bring you more of this good stuff. And I will be also putting up more pictures behind the scenes on my Twitter page after this of the nice shiny new studio. We're hoping to welcome all of you that want to come and visit the new studio. Phil, I know, is organizing or laying the groundwork for that as we speak. Right, for those of you that want to get in touch after the show, do email me on ask@ig.com. I will always try to endeavor to get a reply to you as soon as possible. We also have Julian Wheeler's Shard Capital interview up after this, so stay tuned for that.
Retail's taken a bigger share, according to one of the trading desks I speak to, one of the sales traders there who sees the flow, said, we reckon retail's doing over 20% of the volume right now. And they don't have to sell. That's the big difference.
They just sit on it.
Well, not only do they can sit on it, but it's not their job on the line, right? So if and their size of position, if they get it wrong and want to change their mind, click. They can sell, takes 10 seconds, less. Now, you're an institution, you own 5 million shares of, I don't know, let's say United Health. Big disaster institutional owned stock. It's taken months for everybody to get out of that. It's gone down and down and down. Retail investor would say, don't like that, gone. So they are fearless because they can change their mind and exit quickly. The institution can't do that.
It's an interesting time, isn't it, Julian, for the markets? You know, half of the people that we speak to all saying, Ange, when is this correction? When is this summer correction? Or has seasonality been thrown out of the window?
Yeah, well, I think you've got it there. The usual seasonality, which often sees a correction August, September, we're not through there, so it could still happen. But what we don't normally have is a 20% decline in the S&P from mid-February to mid-April.
Yes.
So this year was rather different. Tariff tantrum. Nobody was ready for that. Everyone was overweight in February and they moved to underweight by April. So the earnings season we've just been through was set so low after April and everybody's saying, can't give guidance, don't know what's going to happen. So they had a free pass. So there's been no disappointments, no reason for the market to go down.
Taking a look at the US 500, which is, of course, the S&P 500 here, you know, we're still looking at 6462 there and creeping higher, you know, green bars outnumbering the red bars there.
Technical trading says that's going higher. There's nothing there saying, and every dip has been bought. You can see down the bottom of the chart there that there's all the volume, big, heavy volume selling. And then we've crept up. And this, of course, is the worry slightly, is that it's very thin out there. August is traditionally thin. But what's interesting is that retail is now making up a larger percentage of the market than I think it has done for some time.
You know, what happens in a market when retail's coming in? We're trying to find this number. I know you've got this, especially for us, because I called you yesterday. Julian, please get this for our trader friends here. Because all the apps as well, you know, we're laughing about this, but it's actually not a joke. And we've seen this in the US. You might as well take away the sell button. Everyone's just going buy, 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 right, on their apps with the fancy colors. Also, passive investing is growing.
Passive investing has been growing for decades. I mean, literally 2 decades now. Passive investors probably control about 40% of the market. But it's now reckoned that retail's got about 20.
And where is this figure that's 20%?
Well, you know, it's open to question. You base on that. You can only base that on the amount of money in places like Robinhood, places like Schwab, these retail accounts. These accounts all trade on margin as well. So it means that during August, when most institutional fund managers are sort of quietly away in, I don't know, the Hamptons or wherever else they're going to be, retail's taken a bigger share, according to one of the trading desks I speak to. One of the sales traders there who sees the flow said, we reckon retail's doing over 20% of the volume right now. And they don't have to sell. That's the big difference.
They just sit on it.
Well, not only do they can sit on it, but it's not their job on the line, right? So if and their size of position, if If they get it wrong and want to change their mind, click. They can sell, takes 10 seconds, less.
Less.
Now, you're an institution, you own 5 million shares of, I don't know, let's say United Health. Big disaster institutional owned stock. It's taken months for everybody to get out of that. It's gone down and down and down. Retail investor would say, don't like that, gone. So they are fearless because they can change their mind and exit quickly. The institution can't do that.
So how do we navigate these markets? Because clearly, if seasonality is out of the window, things are not progressing as they should. We've got Trump tweeting left, right, and centre.
Trump has made this market more of a day-by-day sort of almost game show. But the problem is that he's a bit like the little boy who cried wolf. He frightened everybody in April, absolutely scared the bejesus out of everybody with his tariff numbers. But of course, we now know that that's nonsense. It's not happening. Taco. Now, he could turn around, and all commentators have said that the deal he got with the EU was definitely in America's favour. So he could turn around and say, well, have I been so stupid? And is it playing to his political support? Yes. The whole idea of what's coming will be down the line. It's too early to know.
Neil and Andrew McKelvey chiming in there on the chat right here. This is great because we're going to get Julian, first time in the studio, and he is going to answer Andrew. So I know you can talk about that.
Oh, there we go.
Are you shorting the US market? And if so,
I do short stocks. I see he's picked up Palantir and Nvidia. Palantir is the most expensive stock in the market, but it's also doing incredibly well. And I would say, no, I'm definitely not shorting Palantir. Very simple reason. It was the same question we were asked about Tesla a few years ago. Tesla was crazily, stupidly overpriced, and Palantir probably is as well, but it's doing well. They haven't disappointed. They put up better earnings than expectations, so they have not disappointed. So the stock goes higher.
And
it's a big retail name. It's a big retail name as well. And the retailers are not going to be shaken out. Guess what? So's Tesla. Big retail name. Tesla is a short, fundamentally, under any scenario you like, apart from it's a cult retail stock. So there are much better things to short.
Yeah.
But I do short, yes. But not Nvidia either. Nvidia's the leader. It's not actually that expensive. That's the thing. You want something that's actually going wrong, getting worse. That's a short.
Yeah. And Nvidia also a household name now.
Well, household name. It's not as heavily retail owned, so it's a big institutional name. But it's the world leader in what it does. Why short world leaders? There are really a lot of bad companies out there to short.
Talked about Palantir, about how it is, expensive, but it's still good at what it does. You like another one, don't you? You like another, I think we talked about this yesterday, Cloudflare.
Oh, yes. Okay, so Cloudflare, if you put it on a Palantir valuation metric, is incredibly cheap. It trades for less than half of Palantir. Cloudflare is far less known, but it's creeping up there. It's doubled it's doubled off the April.
I was say this is a really nice chart from a technical point of view.
Now look, that is a harum scarum name. That is a trader's stock, as you can see. When the market comes down, it will get clocked. But they have performed and performed and performed. And if you take that chart back far enough, you'll see that it's now gone through its 2021 high, which is a bit of a key. It went right down. There you go. That's the peak of the market then. So it's on the verge. No, that's 220. It's on the verge of going through there. Cloudflare is, I call it the fourth cloud. So you've got Amazon, Microsoft, and Google. Cloudflare is number 4. But significantly, it was engineered and architected differently. So without going into too much detail, it's a more efficient mousetrap. It does compute, it's infrastructure, it's storage, but it's just more efficient. If you consider that Microsoft now said they have 75 billion worth of cloud revenue, Azure revenue. Now, we can't work out which bit's what's, they're not going to tell us everything. But 75 billion. So Cloudflare's revenue at the moment is 2 billion. All they have to start doing is taking share and pieces. They don't have to win business from Amazon or Microsoft. They just take a piece of it, of a massively growing market. I see that share going a lot higher. Oh, and what's more, At 70 billion, it's one of the largest companies not in the S&P 500.
Love it.
One day.
When it gets added.
That's a little Brucey bonus. That's that'll happen sometime. But we don't, I'm not saying buy it for that reason. But it's a great company. Great company.
The other space that I really like, GLP-1, but Novo has been hit recently because of, competition. And also talked about, having to cut costs. We've got all these, pill versions coming on. Interestingly enough, I found out that the Japanese, had the pill version years and years and years ago. But they don't really need it as a nation, do they?
No, they probably don't.
But Novo and Eli, very interesting to me because I have both.
Okay, well, I prefer Eli to Novo for the simple reason that it is not just a one-trick pony. With apologies to Novo, but they are living and dying on the back of GLP-1s. Lilly has a whole load of other things as well, by the way. It has a very, very good cancer drug coming through called Verzencio. It has all sorts of things. Lilly's had a nice sell-off, there you go. Which would say I would put it in the buy zone now. The reason for that last sell-off was that they have an oral pill that they're trying to bring through, which has a...
Give us the name because I can't pronounce it.
It's really difficult. It's called orforglipron. They produced the results. It works. It just wasn't any better than anything they've got. So it's like, what have you done for me lately? What that means is that's opened the door for another small cap, which I also own and have told clients to buy, which has had a huge move just on the back of this Lilly. It's called Viking.
Right, Viking Therapeutics. Yes.
VKTX. It is, now look, this is harem-scarum stuff, but you can see basically that move in the last week was from the day Lilly announced that its drug hadn't done so well. So that's a move from 32 to 40. So we've had a 20% move in the last week. Now, like all early stage biotechs, this company is burning money like crazy. But if they're in phase 3 of this oral version of a GLP-1, if it works, that company won't be around for long. It will be snapped up by somebody. And it's a market cap of about 3 billion, 2.5, 3 billion. So it's tiny.
Right.
Someone like Glaxo, who's got large war chests.
Yeah, AstraZeneca.
All these companies got plenty of cash, not much in their pipeline. Someone will buy Viking if this thing works. So it's a bit of a Hail Mary, but they are in the right space. Pelican's asking about CoreWeave.
Yes.
I don't like CoreWeave. I don't like CoreWeave because it's crazy expensive. Its business is all tied up with OpenAI. The trouble with CoreWeave is it's owned by NVIDIA. It makes loans to NVIDIA. It's almost like a channel for NVIDIA. I don't get CoreWeave. Now, very clever you if you paid 50 and you went to 150. Interestingly, I can't even short it. So it must be heavily shorted. As in, my machine said, you cannot short this stock.
Computer says no.
Computer says no. Which is actually quite interesting, because when something can't be shorted, that means probably too many people are short. If people are short, you don't want to be. So, but I don't fundamentally see why I want to own CoreWeave. I think there are some fairly other hairy, scary stocks that are slightly more transparent.
Yes, and if you're going to go on a play that is effectively a play on NVIDIA, it might as well be in NVIDIA.
Well, NVIDIA is not expensive. I mean, it really isn't expensive. It's much more. You've got to remember, NVIDIA's done pretty much nothing for the last 14 months. It got to 150 last July, and we're at 180 today. In stock terms, that's really not a lot.
And I don't think it's expensive, given they've gone from talking about petaflops to exflops. So
I mean, that the AI train is continuing.
Yes.
The gating factor, if anything, you mentioned energy, will be power.
Yes.
Right? If there is a disaster out there, it's that the electricity demand.
Yes.
We have a choke point.
There you go. That is my theory precisely with the electricity play. Speaking of which, key week as well. We're seeing this slight, almost like the start of Julian, this rotation back into consumer discretionary.
That's right.
Right, from tech. is this going to be a good time to rotate into those, consumer names like your Walmarts, your Home Depots, your, I know you have issues with Amazon.
Well, I do have slight issues with Amazon because I think they're doing something from defense. They announced yesterday they're now going to do home delivery of groceries. If you're a Prime member, you can now have delivery, same day delivery. Well, obviously, the market initially went, oh, that's good. And they took Amazon up a little bit yesterday. What they really did was they smashed the competitors. So Kroger went down a lot. The ones that really got hit were the delivery companies, which frankly is a business that I think is pretty rubbish anyway. Freight say. So Instacart, DoorDash, Uber, Uber, obviously Uber's wider, got a bigger set, but so Instacart got the biggest hit. If Amazon's going to do home deliveries, that's going to cost them. It's not good for UPS either. It's not good for FedEx. It's going to be more of their delivery. So it's a big change. These are my instant, because it was only announced yesterday. But Amazon seems to be losing share in the cloud business. It's not growing as fast as the others. Google, Microsoft all put up much better numbers this quarter than Amazon did. And Walmart's back in retail. We'll get more from Walmart. You asked about this correction. We didn't get a correction because what we've had is the tech earnings. Tech earnings are great. Walmart will give us more of a clue about the consumer next week.
Fantastic. And just taking a look at Walmart as well to see whether there was a reaction after the Amazon news. The reason why I'm interested is because when I'm in the States, I do take time to go to all these places. I never buy anything. I'm just stood there watching. I know it sounds strange, right? Maybe trainers. Trainers are really cheap there. So I'm wearing a pair of trainers that I picked. I always pick up about 3 pairs because it's just so cheap there, right? Yep. Your Targets, your
used to be. Getting better now. Our pound actually buys something now.
Well, it's more like the dollar is
the dollar's gone down, so now 135. It becomes a bit more.
Yeah, so I come back with minimum 3 pairs of trainers because it's cheap there. But what's interesting?
Walmart yesterday, that red bar.
Yeah, and that makes sense because Walmart. Have you heard about their premium delivery services? I can't imagine anything more horrific because there are more options than I thought possible. One is you pay an amount for them to bring it to your house. Then there's another more expensive option where they get some smart fob, so they put it in your garage or your garage, as they say there. Then there's an even more expensive option where they bring it into your house and they put it in your fridge or where you
know what's coming next.
There's one more, and I just thought, how lazy can you be, people? How lazy can you be? They arrange it on your worktop.
Oh.
And if you can't tell them where to put it, they just lay it out so you know where everything is.
Very nice. Oh, they're going to deliver it. The next thing is, that's going to be a big business. I haven't worked out the exact play on it yet. Drones.
So they put it in your garden or
the drone will arrive. You'll hover above. This could be in, slightly rural America, where everyone has a yard or garden, whatever. So the thing won't go in your house, but it won't have to. But it will be able to leave it. It'll sort of come down. The drone will hover above the garden, and then it will just come down on like a little parachute. Drop it down, and then you'll be there to take it. And if you're not there to take it, it'll just drop the thing outside.